Deepesh Patel, editor at Trade Finance Global. Today we're at Commodity Trading Week in London. I'm delighted to be joined by the CEO of cQuant, David Leevan. David, welcome to Trade Finance Talks.
Thank you for having me. I appreciate it.
Thank you. So, quick introduction. Who are you? Where are you from? And what does your company do?
Sure. So I'm the CEO of cQuant.io. We are a US-based energy analytics firm. We provide portfolio analysis tools for the energy transition, primarily. And we also tend to provide mission-critical analytic infrastructure for our customers.
Thank you very much. Well, before we talk about the energy transition, let's talk about the current energy crisis that's happening. How is cQuant really supporting dealing with the current volatility? We've got geopolitical tensions, we've got rising fuel prices, and we have this global energy crisis.
Yeah, so energy markets have become more complex over time. There was a day, whatever it was, 20, 30 years ago, where you'd have your coal-fired power plants and they'd just run flat out. So energy analytics was fairly rudimentary, right? Now with the advent of renewables and battery storages and many new technologies coming online, I think there, as you mentioned, there's a lot more volatility, there's a lot more uncertainty in energy portfolios. That's certainly for energy companies. It's for the people that take energy from energy producers, retail energy. There's a whole swath of complexity in the energy industry, as you mentioned. So what cQuant does is we provide the tools for companies to forecast value and uncertainty in value in energy markets.
Yep.
Energy portfolios, and help them answer the questions that those senior management teams have for their markets and for their portfolios. So we're a quantitative analysis company, but just to be clear, we don't provide advice. We provide the tools so that they can answer questions for themselves.
Okay, and I guess if companies are equipped with those tools and with those really significant investments in clean energy, particularly solar and wind, which is outpacing fossil fuel usage, how does cQuant view the evolving energy landscape when it comes to this investment?
Yeah, so I think globally, not every market's a little different, right? But globally, we're seeing an increase in energy demand. That's being fueled by a number of things. And then, folks are just starting to project massive growth in energy demand because of AI. So we're going into an environment that some people are calling the golden age of energy. Right? Where new technologies are going to be funded, whether they be hydrogen, ammonia, long duration storage, much more solar and wind coming onto the grid. And as that solar and wind penetration increases, there's more volatility and more uncertainty in energy prices and evolving energy price shapes. So what does that mean for an energy company or an off-taker of energy? There's just more uncertainty. And so the ability to model and forecast that uncertainty and then optimize your decision-making around what to do about that is the role we play, and we think it's an essential role in the energy market.
For energy producers and energy traders, can this actually be turned into an opportunity as we race towards net zero and grapple this transition to renewable?
Absolutely. You talk to any energy trader, and they typically like volatility and they like movement, right? Because they can play those markets and make money doing that. So it presents lots of opportunities for different people and different companies depending on where you are in that energy kind of life cycle, if you will. The strong will get stronger, right? Mm-hmm. And the smart will profit.
Well, I guess on that point, the smart will profit. I guess we're now at a situation where energy traders and producers have got lots of different technology, right? That they're using different systems. I guess in part, how does cQuant differentiate from the others? But what's your advice to some of these producers and traders who are using multiple different systems? How do we integrate a lot of those together to get a single view in real time and be able to make decisions?
Well, I don't think in the short term we're going to replace humans making those decisions. But the markets are more complex, mm-hmm. and so the humans that are making those decisions need better tools and better information upon which to intelligently decide how to proceed in the energy markets. So I think smart companies are using many different types of tools. Some of them are building analytic tools in-house. Mm-hmm. Some of them are buying vended tools like cQuant, and the smartest ones are doing both, right? So you've got ETRMs, you've got short-term analytics, you've got fundamental analytic solutions, you've got quants that you're employing, and you have quantitative tools like ours that you're also using to help those quants make better decisions faster. And so, if you're not investing in analytic infrastructure in today's energy markets, there's a danger that you're going to go the way of the dinosaur, right? And so those investments, now there's lots of ways to make investments in energy analytics, but those investments must be made. And the smartest companies are doing that across multiple avenues simultaneously.
Thank you very much. It's not as straightforward as build or buy.
Oh no, it's both.
Yeah, absolutely. Final question, David, and it's actually for those quants out there. How can quants thrive? What are your top tips to help them thrive in such a volatile and transitioning energy market?
So simulation-based analytics, Monte Carlo simulations, is an essential element of forecasting value and uncertainty. Mm-hmm. I've mentioned fundamental analysis, which is sort of a bottoms-up market design type of analysis. I think the smart companies are using both. And then, what a lot of people do is what we notice our clients doing is they run thousands of simulations on the entire portfolio, and then they run scenarios on top of those simulations. So what happens if gas prices do this? What happens if renewable penetration does that? What happens if long duration battery storage doesn't come online? Right? These are the type of things that people are looking at in order to optimize their portfolio between now and the future, which is another way of saying resiliency, right? Resiliency is essentially, how do I optimize between now and some point in the future? And how do I make good portfolio decisions and create optimal hedging strategies so that I'm best positioned to thrive in an uncertain world?
David, I guess, pardon the cheesy ending, but failure to prepare to fail.
Exactly.
Thank you very much for joining us on Trade Finance Talks TV. Here we are at Commodity Trading Week, London.